As the country's leading medical aid, Discovery Health Medical Scheme prides itself on being representative of all South Africans. That's why we're excited to be the first medical scheme to offer a Shariah compliant arrangement for all Discovery Health Medical Scheme health plans. From 2021, members can have their health plan administered in accordance with principles that are Shariah compliant. To manage your plan with our Shariah compliant arrangement, speak to your financial advisor or go to discovery.co.za. Discovery Health Medical Scheme is a registered medical scheme.
Assalamu alaikum to everyone joining us. I'd like to welcome everybody to what is a seminal webinar on medical insurance, Shariah compliant medical insurance. From the first, just to get us going, I'd like to just start off by observing all of our protocols. Bismillahir Rahmanir Rahim. I begin in the name of Allah, the compassionate and most merciful. And I'd like to send salutations upon our Prophet Sallallahu Alaihi Wasallam. Once again, thank you for joining us. Thank you for making the time. I do believe that tonight we will hear and learn about something quite different, a first fundamentally in the South African medical aid industry market. I think probably one of the first in the world as well. Let me also introduce myself. I should do that. My name is Feroz Borat. I'm the Chief Marketing Officer at Discovery Group. Today, I'm honored to be in conversation with the esteemed panel of experts who are going to talk to us about the Shariah compliant plans that we've introduced as Discovery. First off, we have Mufti Yusuf Suleiman and Uwais Jassat, as well as Discovery Health's Chief Data Officer, Ismail Rasool. And tonight is a very important discussion. First off, it's about the fact that we've introduced the first Shariah compliant plan, set of plans in South Africa. And the fact that Shariah compliant products, not just in medical insurance, but in finance in particular, continues to rise. The demand for these products continue to rise alongside a growing Muslim population. And there is a greater awareness of Shariah compliant products and an inclination to consider more of these products as they grow in popularity. And it's good for our community to have these choices. I mean, previously, these choices weren't really available to us. So it is very encouraging to see that companies and brands such as Discovery are starting to consider that these are viable plans to be offering to our communities. I think it's also an important conversation in the fact that if one considers what's happening around us as far as this COVID-19 pandemic is concerned, more and more of us are starting to realize the importance of having health cover and access to private medical care. It's with that context in mind, I think that we need to bear in mind the number of people in our community that may not enjoy access to private medical care or are uncovered from that perspective. And it's not necessarily because of the cost of these plans, but perhaps because of the lack of compliance in terms of the Islamic principles. So this is really the motivation for us to consider the broadening of our plans to include the Islamic principles and Sharia compliant. So the format of today will be really, I'll be fielding questions to our esteemed panelists, but I would encourage you to please use the Q&A section to post your questions. We'll try and get through as many of your questions as possible. So please do feel free to post your questions. If I may begin, I think I'd like to start with my colleague Ismail Rasool. And I think perhaps the most obvious place to start is to ask Ismail, what were the factors that really led to Discovery Health Medical Scheme, and I'll potentially continue to refer to them as DHMS going forward. What were the factors that led to DHMS introducing a Sharia plan now, and what was the impetus behind that?
I think, Jazakallah, Feroz. Assalamu alaikum wa rahmatullahi wa barakatuh to everyone who's attending. I think, to start off with, there was a clear gap in the medical scheme industry, as there were no clear Sharia compliant options available. So, the trigger for us where we considered launching Sharia compliant arrangements was twofold, I guess. The one was that, Brother Uwais and his team approached us with a view of partnering with the largest medical scheme in the country, and giving us the idea of us being Sharia compliant and creating quite a unique set of solutions for our Muslim community. So that was the one that we were approached by Brother Uwais. And from a discovery perspective, we always strive to drive for financial inclusivity, particularly through the diverse nature of the South African environment. People from different demographics in different parts of the country requiring different healthcare solutions. And so this, just added to that natural thinking of us enhancing our product offering to make it more broadly available and more, inclusive for as many communities as possible. So naturally, for the Muslim community, underlying much of how our needs around financial compliance, Sharia arrangements are a necessity in many ways. And prior to this set of new products, there was almost no Sharia compliant medical scheme products in the environment. In fact, this is the first for South Africa. So those were the two main drivers for those.
Jazakallah. We have got two questions. The first one I think I can probably answer, and the question is, how does the costing compare to a conventional scheme? I think it's important to note that there are no differentials in the way each of these products are costed. It is essentially every product that's available on the Discovery Health Medical Scheme is mirrored with a Sharia compliant product. So it's absolutely no difference in the way the product shows up or the pricing of the product. It is the structure of the product that is fundamentally different, which then leads us into, I suppose, the next question, which is a more technical one, which I'd like to pose to Mufti Suleiman, which is, Mufti, as an independent advisor to Discovery Health in the development of the compliant agreement, what makes a product and offering Sharia compliant, which essentially speaks to how the product is structured?
Bismillahirrahmanirrahim. Assalamu alaikum wa rahmatullahi wa barakatuh. With reference to the compliance in terms of the development of this product, three primary factors were considered when developing this particular product. The first factor that was considered is the development of a takaful structure. Now, a takaful is generally regarded as an Islamic alternative to conventional insurance. But your primary difference between a takaful structure versus any other insurance structure is that in a takaful structure, the participant or member enters into what we refer to as a contract of benevolence rather than a contract of exchange. So members or participants contribute towards a common pool with the intention of benefit of beneficiaries. So the pool in itself is not owned by the administrator, is not owned by beneficiaries, but rather is there for the benefit of all beneficiaries. So we remove the ownership element of the fund from anyone. It is there for the benefit of all beneficiaries. So if there is any surplus within the fund, it cannot be for the benefit of the administrator. If there is any, in the case of the solution of the fund, the excess funds or any additional funds within that particular scheme does not then go to the administrator, etc. It will either go to the beneficiaries or it will be given to a charity. So the underlying structure of the fund is materially different, but does tie in with what we see from a Medical Schemes Act. In a Medical Schemes Act in South Africa ensures that the fund remains independent from the administrator, and that's very similar to or akin to a takaful structure, which we have in this place. So that is why in the creation of the takaful structure, there wasn't significant change to be able to conform to the requirements of Sharia. So that would be the first one, the creation of a takaful structure where people contribute for the benefit of beneficiaries, and it's for the benefit of all within that pool. And the pool does not belong to any particular individual. The second key component or element that was considered in the development of the structure is that we have a medical savings account for for participants or for members. And the big question was, how do we invest their funds to ensure that it's not tainted and to ensure that no interest is earned on those funds? So that is where we'll utilize Sharia structures in the form of a wakala, an investment agency structure, or we utilize what we refer to as a mudaraba structure. Mudaraba is referred to as a passive partnership. And a passive partnership where one party contributes capital, the other party contributes entrepreneurial skill. And thereafter they both share in the profits according to the pre-agreed profit sharing ratio. And that's fundamentally how Islamic banks also operate on the investments side. When they receive a deposit, the medical savings account will operate in the same way. And how it is fundamentally different from conventional. In the conventional side, when a person places a deposit or savings, it is tantamount to a loan that is given to the company. And any return over and above that loan is regarded as interest, as we understand from the hadith of Nabi sallallahu alaihi wasallam, that every loan that derives benefit for the lender is referred to as riba, and riba is loosely translated as interest. Obviously, riba has great detail in it. But when it comes to the development of an Islamic investment structure, we enter into a type of a partnership structure where one party contributes capital, the other contributes entrepreneurial skill, and they share profits according to a pre-agreed profit sharing ratio. So there isn't a fixed rate of return on capital that is paid to the investor, and in a case that we're talking about, into the medical savings account. So that was the second factor that was considered in the development of the structure. The third important factor that was considered is that after contributions are paid and claims are paid out, any balance that remains within the Sharia fund will obviously be invested in a manner that is consistent with Sharia principles.
Jazakallah Mufti, it's a very comprehensive response here. There is a question around, will this webinar be available post the session? Yes, we will make that available. I understand some people are struggling to connect. Ismail, there is a question around how I move my clients across. This is obviously from a broker. What's the process of moving clients across from a normal plan to a Sharia compliant plan?
So the process is, quite similar to moving any client across. In fact, the Sharia compliant options provide no other added admin to move clients across. So the process would be exactly the same. There are two options, obviously, for members to get further details and brokers to get further details on our website. We have a campaign where, new members can join in through a 60-second process. And then naturally you could phone in as well. And, the phone number for those is 0860 000 628. And that's available on the website as well. So the process for brokers is exactly the same as brokers would typically move their clients across for other plans, and hence the Sharia options provide no differentiation whatsoever. In fact, I'd go further that the Discovery call center and the Discovery new business team are quite alive and alert to understanding the new benefit options, the Sharia compliant arrangements, and so they all ready to move forward with the campaign, which is the switch campaign or the campaign to bring new members on in 60 seconds is starting from Thursday, if I'm not correct, if I'm not mistaken.
Jazakallah. There are a few technical questions. In terms of the regulations, Ismail, that govern how a medical scheme should invest members' funds, where and how does the Sharia compliant program fit in? Maybe I pose it to Uwais and to Mufti as well.
Assalamu alaikum. I don't know, Ismail, I don't know if you want to start, or I can answer that to a certain extent. Look, in terms of the investments, alhamdulillah, because we coming as a medical aid late into the market, the banking and financial services industry have already created a number of products in the market that allow us to invest in different elements and different structures that still remain compliant with the regulations. So a lot of the banks that we currently use as Discovery or that are available in the market, and investment management companies offer products that we could use that allows us to remain compliant with this regulations in terms of investment of medical aid funds?
Ways, if I just stay with you for a little while, could you just then perhaps elaborate on some of the challenges that an advisory committee that you form part of is usually faced with when involved in the development of such an arrangement?
Well, I think Mufti will be best placed to answer that, being on the advisory committee. I mean, Mufti, you can speak on this, and I can add if necessary. But Mufti was in part of that process, in terms of the product development, and he can talk about that.
So, Feroz and Uwais, in terms of challenges when we develop a Sharia structure, I think the first biggest challenge is understanding the as-is conventional structure. So when we say understanding the as-is conventional structure, it refers to the current structure, whether it's from a financial perspective, accounting, legal, regulation, and processes, etc. And when we look at the current structure and we try to determine within the current structure what is compliant and what is non-compliant, then when we decide what is non-compliant, from there, we then develop a solution in terms of the non-compliancy elements. We create a concept document. After the creation of a concept document, we engage extensively with management to understand whether that concept can be operationalized well within the business. And once we have a concept that can be operationalized well, then only do we move ahead with development. So step one would be, and the biggest challenge would be, understanding the current as-is scenario and areas where we need to deviate, and then obviously finding a solution for deviation from the current structure as the current structure is non-compliant.
Okay. Ways, in our discussion with you, and you've obviously done this before in previous roles, if we just change tack a bit, what would you say are the challenges that's facing the financial well-being of our community in South Africa, of our Muslim community in South Africa?
Well, we've seen over the last 20 years exponential growth in financial services that cater for the Muslim market. I mean, we've seen since the early days of Al Barakah Bank coming in that a lot of the players in the market have started offering Islamic financial products. So as Muslim consumers have become more aware of what's available, they sort of adopted products. But I think the primary driver of that is that Muslims nowadays are seeing a lot more than just halal food as what's compliant or not. And now Muslim consumers are looking at the entire ecosystem. So we see, I mean, internationally, even modest fashion wear becoming a trend at the moment. So if you look at the entire ecosystem of a Muslim person, and we know as Muslims we've got to comply from the minute we wake up to when we go and sleep. Our entire life, the way of life that we live, should be compliant. So everything we do has to have an element of compliance in there. And financially, I mean, we've always looked at, okay, I need to earn halal income or spend, but the spending part was always questionable in terms of, what do we do with the money? And that is changing. And I think the reason for that is because people are becoming a lot more aware. There's a lot more information about this. So people are asking questions. And we've seen now with the likes of all these banks and investment companies launching in South Africa, that the one notable gap was around medical care. And as you've mentioned, medical care is now becoming a necessity. And in this year, it was highlighted by the COVID disease pandemic. So as people now looked at it and said, okay, now everything I'm doing is compliant, but now this debit order is going off for medical aid, but that's not compliant. So the push actually comes from the consumer to say, I want products that are compliant. And our role is then to look at that and say, how do we develop solutions that address this need?
It certainly is a very important need. Ismail, just drawing on some of your insights from a data perspective, can you offer us any fundamental insights as far as what's really plaguing our community in terms of non-communicable diseases, and what is it that we seek to achieve by ensuring wider cover through our DHMS Shariah compliant plans?
So I think, we're all familiar with the non-communicable diseases, as you say, the lifestyle diseases, and that continues to drive in an upward direction, particularly as we get older, we struggle to keep healthier. And so, those rates of incidence of change of people becoming more sicker and their lifestyles sort of deteriorating is only on the up. We find though that, as people stay longer on medical aids, naturally they tend to use more of their medical aid. And so the Shariah compliant options ensures that the benefits available to members on the plans that they choose prescribe to the minimum set of benefits, prescribed minimum benefits, and therefore, seeking care and medical cover for those types of conditions are always covered through the medical scheme, particularly through the PMBs. So that's the one, but we're also seeing, a new story emerging with COVID in that, it's not a communicable disease, a lifestyle disease, but interesting, we found that, those people who keep healthy and who generally were healthy and sort of caught COVID, if you like, so that, became infected, their outcomes on mortality and admissions were lower for the same risk for the same sort of demographic of person that wasn't keeping healthy. In other words, eating healthy and exercising, which is, fundamental to Discovery's core purpose of making people healthier. So, we're finding this interesting link that keeping healthy and maintaining a good lifestyle is critical, whether, you are going through a lifestyle changing condition like diabetes, etc., or your risk of infection. And once you get that risk, your risk of mortality and admission. So, those two are coming together, interestingly enough, and therefore driving further our core purpose.
Jazakallah. Ismail, there's a few questions from attendees on something that you have already alluded to, and the question, around existing DHMS members wanting to switch, the process that you've spoken to. But there's one or two specific questions around, will you be waiving late joiner penalties, as an example, if somebody were to join on the basis that they weren't part of a medical scheme prior to joining a Sharia plan, on the pure basis that there wasn't an option available to them in the past?
Yeah, I think for those, that's a good question. It's obviously complex and complicated. The short answer is that late joiner penalties, are allowed by the Medical Schemes Act, and they help medical schemes or funds protect from anti-selection. So they serve a purpose. Now, notwithstanding the fact that, we didn't have a Sharia compliant option for members that would have loved to have entered into the medical, schemes environment for the reasons Wais brought up. I think the late joiner penalty will be applied, I think, on a case-by-case basis. There is no blanket decision to waive it for the protection, obviously, for the entire scheme. And it's therefore, to ensure affordability and sustainability of the fund. So it's a mixed answer. I know it's not the ideal answer, notwithstanding, the not having a Sharia compliant option before. But I think any new members coming on for the first time in the medical schemes environment should apply, and on the basis of the application form and on its, on what the merits of each individual will be decided on a case-by-case basis. The same thing will apply for waiting periods. If existing members from other medical schemes needed to come over, those will be on a case-by-case basis, as opposed to a blanket rule.
All right. So if I may just come back to Wais and Mufti, there's some specific questions which I think you may have alluded to. Who administers and has control over the Takaful Fund? And is it ring-fenced from the conventional Discovery medical aid, ensuring no contamination of interest and the like? And related to that is, are there targeted returns per annum?
So in terms of the management of the Takaful Fund, so it is definitely all the Sharia arrangement plans are ring-fenced within the Discovery health medical scheme, in the sense that all the funds are kept separately, invested separately, and that is managed separately. And the oversight of that, although within Discovery we would have oversight, but the additional oversight is the Sharia board that would then ensure during their reviews of the Sharia compliant arrangement, would ensure that all of that is compliant and that we adhering to the process that they've put in place for us to make sure that the funds are ring fenced and that we're investing according to what we set out to do. So in terms of the targeted return, obviously, I mean, what our primary objective is to ensure that members on the Sharia arrangement are not in any way prejudiced compared to the conventional scheme. So the first target we want to ensure is that we at least give members as much as they would get on the conventional scheme. Now, while that is a target, remember, we would invest in Sharia compliant avenues, and those structures, as Mufti mentioned earlier, we would try and get the best return we would for members. There is risk involved in those things, but it's managed risk. And whatever we return, we would then share that with the customers as a profit share back to the MSA, or to individually, or on surplus funds back into the medical scheme. So ultimately, I mean, we want to make sure that we as effective as the conventional scheme, but I mean, we confident maybe we can even do better and get better returns than the conventional scheme.
There is a related question. How would the scheme pay the claims? Should they have to be paid from the MSA, and if the MSA is invested?
No, so we would structure that. I mean, the investments, obviously, we in terms of what we do with the actuaries and the modeling and all of that, I mean, similarly to the rest of the scheme, everything is not invested because we got claims every day. So the way we structure the investments is we look at and we model behavior, and we look at what's the expectations of claims, and we would be able to then forecast what we would need and what we would need to have on hand to be able to pay for claims. So this is part of the normal management of the medical scheme, and we wouldn't necessarily have to do anything differently for the Sharia scheme, because we expect behavior to be similar. So, I mean, in terms of claims of even not only the MSA, but hospital claims and all other claims, we look at behavioral analysis and we then invest based on that.
Right. There's a question around other Sharia compliant products, which I suppose I can speak to, but Ways, I'd like you to perhaps just weigh in on Vitality. The question is, are there any other product offerings from Discovery that are compliant in, for example, Discovery Bank, Discovery Life, etc.? None of those are necessarily compliant. There are investments that are compliant within Discovery Invest. And Ways, I'd just like to ask you to please maybe just expand a bit on how Vitality is treated.
Yeah. So, I mean, look, what the rest of the Discovery products, I think the key thing is that this was a particular need at this moment in time, because there isn't, we first to market and there's no other Sharia compliant medical scheme. But I think Discovery, like any business, will look at it and see, depending on the take up, and if they see that, you know what, this is actually a market that, is feasible, then, I mean, in a short manner of time, we'll be able to launch in the bank or investments or in any of the other Discovery products that we do have. But I think the key message to all our participants is that it's a chicken and egg situation. You need to support the product so that we can enhance and grow more before we offer other products, or do we offer the other products and wait for customers to join? So, I mean, we're looking at it from both perspectives, but we're hoping that the market would take on to this product and then give us the springboard to launch other products within the Discovery brand. In terms of the Vitality, look, from a Sharia perspective, and the Sharia board is, I mean, we're in the process of Vitality, but the reality is that the Vitality product in itself is there isn't problems from a Sharia perspective. I think it's the usage and how customers use and the benefits of that. But at the moment, I mean, there isn't any issues around customers using the Vitality and the Sharia compliance around that.
Mufti, we had some people that joined us a bit later and may have missed your opening remarks around the basis of the Sharia model of the product. Could you give us a quick synopsis?
Jazakallah for that. Feroz, I'm browsing through the questions and I see many of them relate to the Takaful Fund, and you're asking for a quick synopsis, but if I can maybe take a few minutes on this and elaborate. Because one of the questions were, what is this a waqf-based fund or is it not a waqf-based fund? And secondly, there were questions around elaboration around how is it really a takaful fund, etc. So let us start by stating that internationally there is an organization called IOFI. IOFI is an acronym for Accounting and Auditing Organization for Islamic Financial Institutions. This organization is based in Bahrain. They have representation of scholars and specialists in the Islamic financial services field from throughout the world, primarily from OIC member countries, but also other countries. This particular organization looks at Islamic financial services in totality and then issues standards after engaging and deliberating with experts in the various areas. So they would issue standards around accounting, around auditing, governance, ethics, and obviously they have Sharia standards because they are Sharia scholars that also serve on the IOFI panel. So the Takaful as a structure has been approved at IOFI level, which is in Bahrain by ulama throughout the world, has also been deliberated at OIC. In other words, the Fiqh Academy of Jeddah has been approved also at the Fiqh Academy of India, etc. So around the Takaful, the concept of Takaful, and I'm not going to deliberate on the concept of Takaful because that has already been approved by senior ulama globally. The question is around what structure of Takaful. Globally, there are two types of structures that are utilized on Takaful. The first is a waqf-based structure, and the second is what we refer to as a tabarru model, where people contribute for the benefit of beneficiaries without the creation of a waqf. The purpose of the creation of a waqf is merely to create a separate juristic entity within the structure. So the purpose of the waqf is when a person contributes, it becomes within the ownership of the waqf. So that is one structure that has been utilized in certain jurisdictions. Another structure that has been utilized in certain jurisdictions is what we refer to as a tabarru model, and this is what IOFI primarily speaks about, where people contribute towards a common pool. The common pool is segregated as a special purpose vehicle and is not owned by any particular administrator or any particular beneficiary. Now, the purpose of doing such a thing is to ensure that the contract is changed from a contract of exchange. What is a contract of exchange? A contract of exchange is I go and I buy something or I sell something, etc. All of those things are contracts of exchange. But when you contribute towards a mutual fund that is there for the benefit of beneficiaries and you're contributing with the intention of benefiting beneficiaries, then it's not a contract of exchange, but rather a contract of benevolence. And why it said it's a contract of benevolence, there are key features that distinguish the two. And one of the key features is the intention, you're contributing for the benefit of beneficiaries. Secondly, the pool is not owned by the administrator, but rather is there for the benefit of beneficiaries, as we see here within the HMS and the Medical Schemes Act. The third is that in a case of any surplus within that fund, no particular company can claim the surplus within the fund. Either it is distributed based on the rules of the fund, it is either distributed to beneficiaries, members of the fund, or it can be donated to charity, depending on the rules of the fund. What happens in a case of dissolution of that fund, liquidation of the fund, like I mentioned, it either goes again, any surplus will go towards beneficiaries or will go towards charity. So all of these are clear indications that Discovery Health, in the scenario that we're talking about, never has a claim or title towards whatever we see within the underlying fund. And that is where the fundamental structure of the Takaful fits in. The fund has to be independent from the administrator and is there for the benefit of beneficiaries. So that would be your first fundamental difference that we see between or rather the fundamental factors that we considered in the development of a Sharia structure. Like Uwais mentioned, it is segregated, the investments are segregated, etc. And it's the second fundamental consideration that we kept in mind when developing this is that how do we ensure that investments are done in a Sharia manner? And you have two types of investments. The first investment is a medical savings account, ensuring that that is done in a Sharia manner, yet achieving a similar return to what clients would have or members would have achieved in a conventional sense. And then the second is how do we invest surplus funds over and above, after the payment of claims, any surplus funds within the DHMS, how do we ensure that it is invested in a Sharia compliant way? And very important is that we maintain international best practice in terms of Sharia compliance and Sharia governance, which I'm not sure if time permits, we can go into the detail also.
Jazakallah Mufti. I think it's worth perhaps going into a bit of that detail, if you don't mind.
Okay, so again, IOFI, like I mentioned, here's a governance, here's numerous standards. And we have to take those standards and ensure that wherever certification is offered and wherever we certify a particular product as or service as compliant, we abide by IOFI primarily. So of importance here would be IOFI's governance standard and IOFI's Sharia review standard. The governance standard would dictate that a minimum of 3 scholars review and approve all from concept phase right up to development and implementation. Everything is reviewed by what we refer to as an independent Sharia advisory committee. In the case of DHMS, we have appointed an independent Sharia advisory committee. Mu'ata Karan from the Western Cape is there on the Sharia advisory committee. Mufti Ahmed Suleiman and myself, the 3 of us have been appointed as members of the Sharia advisory committee. The second important element is the Sharia reviews. So if we say something is compliant, it's not a once-off compliancy certificate that is issued to Discovery Hub, but we need to ensure that a minimum of biannual reviews are conducted on the operations of the Sharia fund to ensure that all operations were conducted within the principles and processes that were approved by us at inception. So that would be the second element to ensure that there is continued Sharia compliance within the fund. We would have, for example, there's a constitution that dictates that a minimum of 2 Sharia advisory committee meetings a year. What is a quorum for a meeting? How do we reach resolutions, etc.? All of those things are governed and obviously adopted to ensure that we abide by our governance standards.
Jazakallah Mufti. Where's a question coming through is a very pertinent one. What would happen if either the MSA or the scheme itself or that particular pool loses money? Does that impact a member's ability to get paid out for any claims, or are their benefits in any way decreased?
No, so there wouldn't be any impact to the member. So remember your MSA at the beginning of the year, the fund or Discovery gives you access to that full balance of your MSA. So in January, you have your full year balance of your MSA and you can use it in the first few months, or you can stagger it over the year, but your contribution would be equal over the 12 months. So similarly, if there is a loss in 1 month, we would cover that and then fund it from other members and then build it up towards the end of the year. Ultimately, I mean, if we look at the entire scheme, and if the entire scheme is at a loss at any stage, so we've got a fund, a ring-fence fund that pays for Sharia compliant claims and is funded by the Sharia compliant arrangement members that are on that Sharia compliant arrangement. If we do have a situation where we have whatever, I mean, a huge catastrophe and we've got a lot of ICU cases, what we have agreement with the Discovery Health Medical Scheme is that they would provide us with interest-free funding to cater for that losses. And the reality is that medical schemes operate like this in any case. So if one plan may be running at a loss, another plan would fund that plan, and they would subsidize between plans. But now we've got a formal arrangement with Discovery in terms of the medical scheme to make sure that the funding would be on an interest-free basis and that we would pay them back. So we're not subsidizing, and not refunding that. So we would pay them back over the subsequent months or years or however long it takes for us to pay them back. But we've done the numbers and we feel that, we would be able to run the scheme, normally without needing any of those funding. But I mean, like I say, we never know what could happen. So we've put that stopgap in place to ensure that we do have that cover should the need arise.
Jazakallah Wais. See, we don't have too much time left. I think we've covered most of the questions. If I do open it up to the panel, Ismail, Wais, and Mufti, are there any closing remarks potentially that you feel that you'd like to get across?
I'll start, Firoz. You know, I want to say, you know, at a personal level, I was quite excited, you know, that Discovery has partnered with Uwais and Mufti and the Sharia board to bring these products to the market. You know, I personally have moved my plans immediately onto the Sharia options, seamless, and you know, I think that the way Discovery has embraced taking on the Sharia options has been one of, you know, collaboration and looking for inclusivity, as I said in the beginning. So, you know, with that in mind, we also kept a strong sort of ethos of making sure that when members want to move, current members want to move onto the Sharia options, that during the year-end process, they should just elect the Sharia options. We've got 23 plans, and for each of those plans, there's a Sharia option. So it's, you know, we haven't downsized any options for any members out there. And you've created a Sharia option for every single one of our existing plans. And so that I'm hoping would get, you know, as many members to that, you know, to take up plans that requires and suits their needs. So I'm quite excited by this and, you know, quite encouraged that we have launched the first unique Sharia compliant medical scheme options in the country.
It certainly is very exciting. Uwais?
Yeah, so I think the key message from us is the simplicity. And I think what Discovery has done is made it extremely easy for existing members, new members. I mean, you can get a quote in 60 seconds, or you can, you know, change your medical aid quite easily, you know, through the call center. So the ease of moving on to the Sharia arrangement is quite exciting. But I think the key message is obviously Discovery is the leading medical aid in the country with a range of benefits that you can't really compare. And now we're adding Sharia compliance to this, which almost is a no-brainer then, you know, for any Muslim customer looking for medical cover.
Jazakallah. Mufti, if I may come to you for some closing remarks.
So my remarks are not in particular reference to Discovery, but rather Islamic financial services in general as an industry as a whole. When we look at the development of Islamic financial services in terms of not only theory but practice, we already seen in 1963 the development of the first Islamic bank in Egypt. In 1975, Dubai Islamic Bank started. In 1975, we've seen extensive discussions in many Muslim countries around the development of Islamic financial services. South Africa, we have been late to market. Although we regard ourselves to a great degree as advanced Muslims, but when it comes to Islamic financial services, we have been late to market. But opportunities like these, we need to seize, because if we do not support items, and I'm not speaking again with reference to Discovery, but I'm talking Islamic financial services in general, bringing it to market comes with great effort from numerous stakeholders. It is our responsibility then as the public, Muslim public, to support such initiatives so that we make sure that there's success and so that we can have additional initiatives like this that benefit us and propositions that fulfill our needs.
Jazakallah, Mufti. Appreciate that comment. I mean, just from my side, you know, we at Discovery, our values and purpose guide us in pretty much everything that we do and how we do it. And you know, religious sensibilities are very important to Discovery, and it spurred on this initiative to get compliant products into the hands of our Muslim customers. So I hope that we've managed to show how considered we are, or we were through this entire process. We do appreciate your attendance this evening, and we hope that you will get in touch with us either through our website or through your broker. And please, like Mufti said, it is important for our community to support the Sharia compliant product, because that enables us to develop further products that benefit our community. So in closing, I'd please like to just invite Mufti to lead us into with a qiraat to close the session out, inshallah.
اللهم لك الحمد كله ولك الشكر كله إليك يرجع الأمر كله وعلانيته وسره وأهل أنت تعبد وأهل أنت تحمد اللهم لك الحمد كما ينبغي لجلال وجهك ولعظيم سلطانك. اللهم صل على سيدنا ومولانا محمد وعلى آل سيدنا ومولانا محمد وبارك وسلم. اللهم وفقنا لما تحب وترضى من القول والفعل والنية والهدي إنك على كل شيء قدير. اللهم ربنا آتنا في الدنيا حسنة وفي الآخرة حسنة وقنا عذاب النار. سبحان ربنا رب العزة ما يصفون والسلام على المرسلين والحمد لله رب العالمين.
Shukran, Jazakallah, Mufti, and Jazakallah to everybody joining us. Assalamu alaikum wa rahmatullahi wa barakatuh.
Alaikum assalam.